Yeah, it was a pivotal moment. It was actually an epiphany that I had. Have you ever had an epiphany?
Yes, I do.
Okay, so
When
time
I when
stands
when it came about the name Bricks and Banks, that was an epiphany for me.
perfect. Perfect. So you know what that's like. So I had an
Yes.
epiphany, and during that, it's like time stood still, and I knew three things very clearly. I knew that I would be speaking on stages around the world, just like this one. So thanks for having me in the UK today. And I'd
Thank
be
you.
talking about money. Specifically, I'd be helping empower people with money rather than being enslaved by it. And
Mm.
lastly, I was told or I knew that I would be teaching from personal experience, not from a book I read or course that I took.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
Hey everyone, welcome to another amazing episode of the Bricks and Banks podcast. Today we have an incredible guest who is truly walking the walk when it comes to financial empowerment. Jaden Sterling has a vision to help people build wealth, and today he's the founder and CEO of SSP Software, having traded off his corner office on Wall Street for a mission to empower the Main Street investors. Jaden, you're a wealth coach, a wealth builder, and you're charting a new path for us. Welcome to the pod today.
Hey, Steph, thanks so much for having me. Looking forward to being here.
Yeah, how's your day going? How's it? You're my first guest from Canada, British
Right.
Columbia.
Good, good. Yeah, I am American, but I've been up in Canada for about 15 years. So,
Yeah,
yeah.
you're a Canadian. Deserve it. You've walked that walk. How's the weather over there though?
Good. Warm today. We finally have a nice summer day here. How about there? Pretty warm?
Mm. Yeah, it's quite warm. It's 22 degrees here in London, so we're good.
Wow. Okay.
Yeah, it's not hot. The weather is UK style gloomy, so the sun is not penetrating the ozone layers yet, so we're fine.
Okay.
But let's talk about you, Jaden. At 14, you envisioned helping people build wealth. Could you share what sparked that pivotal moment for you?
Yeah, it was a pivotal moment. It was actually an epiphany that I had. Have you ever had an epiphany?
Yes, I do.
Okay, so
When
time
I
stands
when I came about the name Bricks and Banks, that was an epiphany for me.
perfect. Perfect. So you know what that's like. So I had an
Yes.
epiphany, and during that, it's like time stood still, and I knew three things very clearly. I knew that I would be speaking on stages around the world, just like this one. So thanks for having me in the UK today. And I'd
Thank
be
you.
talking about money. Specifically, I'd be helping empower people with money rather than being enslaved by it. And
Mm,
lastly, I was told or I knew that I would be teaching from personal experience, not from a book I read or course that I took. So
mm,
here I am, 14 years old, and I get my life purpose downloaded to me, and I've followed it. I went to school and studied finance and worked on Wall Street at two major brokerage firms. And so,
mhm.
yeah, that's a little bit about my background.
But can you share the events that happened that day that made you make that decision? Because at 14, you should be having fun playing football. Why are
Yeah.
you looking towards helping people make money at
Well,
that young age?
it wasn't my decision, or I'm sure it was
Mm,
at some point, but it's like I received this information from the universe.
okay.
It just like dropped down, like a gut feeling, if you've ever had a strong gut feeling. And
Mm,
so, yeah, it was just one of those things that have happened. And I've had other things like that happen to me along those lines, but that was one of the first ones that I can remember.
wow. And talking about your background, you went to college and you landed on Wall Street. That's such a coveted job opportunity. Why did you leave all that to just chart your own path? You were already on a path to greatness already.
Yeah, it's a good question. I started to recognize that the industry that I was working in was not really helping people. It was focused on making money off of people, not for people. And to me,
Mm,
that didn't feel right. It didn't feel good. And I knew there was a better way. And the way that I saw was from my multi-millionaire clients who would come into the brokerage firm and they'd only have like 4 or 5, maybe 6 stocks that they owned. So they were very focused portfolios of individual stocks, not in the packaged products that they wanted us to sell, like mutual funds and things like that.
Then you saw that and you recognized the greed in the system and you wanted to do better.
Totally. I recognize, I mean, the system, it's so greedy that they even track how much money they make off of clients and portfolios. So, when you wake up and realize that kind of thing, it didn't work for me. And I, I knew, so I was 30 years old when I finally woke up to this understanding that this is kind of a corrupt system, seeing it from the inside, I could tell very easily that it wasn't a system that I wanted to be a part of for a long time. And I also knew that even though I was in a position to help people with their finances, I was still pressured to sell mutual funds and managed money and packaged products that made a bunch of money for the Wall Street, brokerage firm, not for my clients. So that's really what happened there. I just realized, the system is not one that I want to be a part of. And there's a better way. And I could see the better way from my clients who built a lot of wealth with individual stocks. Does that make sense?
Yeah, that makes sense. A lot of sense. Essentially, where you didn't like what you were doing, you wanted to do better, and you decided to start your company, Sterling Stockpicker. Can you share about what your company does and how you're moving this vision and changing lives?
Yeah, I think we really are, from the feedback that I get from our users of the platform, that it's just much more than a stock investing platform. It's an area where we've built a community to help people manage their finances better, reduce debt,
Okay.
learn how to invest, get started, kind of get comfortable with investing. And so that it's been a labor of love. We took 3 years to build out the platform, to test it. We brought beta testers in, gave them free access to the platform just to try it out. And we wanted to know, hey, does this work for you? Does this make sense? That kind of thing.
Okay.
We're in it for the long haul. We've been doing this for a long time, and now we're starting to see a lot of traction with folks coming on. It's kind of like the saying, if you've ever heard, it takes 8 years to become an overnight success. Have you ever heard that? So that's
I haven't.
that's what we're experiencing.
I don't think the Gen Zs would be would like you with that one. 8 years to be an overnight success.
That's
I
it.
just want to dance on TikTok and make money tomorrow morning.
Yeah, exactly.
So what's one major misconception people have about financial success? And you being on both sides of the coin, you being on Wall Street and now you helping the Main Street investors. What's the major misconception people have about financial success, and how are you helping clients overcome this with your system?
Yeah, I think a big myth is that they have to be diversified. And we hear that all the time, reduce risk, diversify your money. And the reality is it doesn't give anyone financial success. It just fragments someone's portfolio. Like, that's why mutual funds underperform the markets consistently, because there's anywhere from 150 to 200 stocks inside each mutual fund. So it's way too diversified. If you just stick with big companies that are tried and true, Nvidia, some big names, and just continue to invest in those, you'll get way better results. So I think the first thing is people have to recognize that that is a myth and it doesn't work. In fact, if you've heard the name Warren Buffett, he's often called the godfather of investing. He said it best. You've heard of him. Okay. So he said, diversification is the tax that people pay who don't know what they're doing. Makes you think, doesn't it?
Yeah, it makes sense. But then again, there is an argument for it that you're basically spreading your risk and hedging against that risk. So, because if you put all your eggs in one basket, you go down the drain quickly. So, what's your take on that?
Well, I put all my eggs in one basket during the decade of the 90s. I bought one stock, which was Travelers Insurance. And that stock, I invested $70,000 and it grew to over $900,000 in less than 10 years.
Okay.
Yes. So the stock
Okay.
tripled. I didn't know it was going to triple during that decade. It did
Hmm.
really, really well. It was part of my job, my stock purchase program. I just kept adding money to it. And it gave me financial freedom. And I don't know of any other portfolio that you could have that was diversified that would give that kind of return. Do you?
No, because when the essentially when you diversify, you're basically limiting yourself. You're limiting your growth. You're limiting yourself and spreading that risk. By the time the risk you think you're hedging against might end up being the one that brings you down anyway. So, okay, you have a point in that. And it reminds me of one of my guests we were talking about yesterday. It's real estate inclined, and he was talking about the fact that he rather focuses on one line of real estate. There are so many real estate strategies. He focuses on just one and knows it well and does it well, and it thrives for him. He's not interested in doing a billion and one things. And I think you're like that same guy.
Same.
One thing,
One thing.
the riches are in the niches, and that's what you're doing.
I
And
like that. The
we're
riches are in the niches. I mean, let's
exactly.
really underline that for people because you're now starting to be okay with that idea, but it took you
Hmm.
talking to the real estate guy, now talking to the stock guy, and we're both saying the same thing, we're like, and I did the same thing in real estate. I focused on apartment buildings. That's what I ended up
Hmm.
buying when I got into real estate, just one single direction. And
Yeah,
when you pick a vehicle, you just stay in your lane, right? Just keep staying
true.
in that
And
lane.
you become an expert in it because people would listen to you. Like I would listen to you if I want to pick stocks. I wouldn't listen to someone that has 3 million stocks in their portfolio. They're like,
There you
what do
go.
you really want? Okay, yeah, that
Exactly.
thank you for reframing my mind on that because I'd
Welcome.
always been the diversification lady. It's good to spread your risks, but there, like you said, there are downsides to it. So now, when researched your background, I assumed initially at first glance that you're a tech guy because of your proprietary software, your stock picker software. But delving deeper, I see that okay, no, you're a Wall Street guy
Yeah.
that's camouflaging as a tech guy. So how is your platform changing with the AI boom? How are you using the AI tools to make your streamline your investments better?
So our platform uses AI from our homepage all the way to our analytics from our software. Like we're full on in using that technology,
Okay.
and it helps make our software better and easier to use. So
Mm,
because of AI, our software knows what someone's risk level is. It knows
okay.
their personal values. We incorporate personal values into our stock picking software because I'm such a believer in alignment and how important alignment
Yes.
is when when you're investing. So it's only going to show you companies that are in alignment with your personal values and with your risk level. And
Mm,
it's AI that does that. There's no other way we could have accomplished that without AI. So it makes it an easier platform. And then we also took it to the next level where we offer our AI tool to our user base. So they
oh.
can ask it a question like, well, how do I reduce debt? Or,
Mm,
analyze my portfolio and let me know where I need to add a stock into a different sector or something. And it'll do all of that for the user.
oh, that makes a lot of sense.
Hmm.
You're basically transforming the way people invest, and you're leveraging AI. So, what's like one big story that stands out for you with someone using your system and making tremendous success with it?
It's funny. There there's a video out there from a teacher, high school
Okay.
teacher. His name's Chris Johnson.
Oh,
And
okay.
he started using our platform and he turned, I think it was 17,000 into $100,000 within 6
What?
months. And
What?
yeah, because of
Okay.
his success, he recorded a video and it was like a test and he emailed it to us and we were like, "Oh, that's great. Thank you." And so now that that video's out, I saw someone commented and the comment was something like, "This is how you know that this guy was paid to make this video." And I
Wow.
commented, I said, "Absolutely not." I said, I know the guy personally. He's a high school teacher and he sent this in
Yes.
unsolicited." So isn't that funny that people are like, that's too good to be true and this video is fake? And
Yeah.
it's like, no, it's actually real. He had those results. So he joined our $100,000 club and he's been crushing it ever since because he's got clear goals as to when he wants to retire. And so he's used our software for as a vehicle to get him there.
Wow. Yeah, I know people can be wary because when something sounds too good to be true, people are like, okay, is this a deep fake? Is this under deep fake video? Or is this for real? But
Exactly.
okay, that makes a lot of sense. But how do people get into the program? How do people get to start using the software? Are there like loops of reviews you have to do before you let people in, or it's just open to everyone?
It's available to everyone. We have a 30-day trial period, so someone can
Oh,
test it out, get in there, play around with it, see if it's
sure.
something that interests them or not without. I don't even think we take credit cards up front. I'm not sure, but I don't think we do. But they've got 30 days to try it out, and then if they want to hang in there, that's great. Or if it's not for them, that's okay too. It's no big deal. There's no pressure. We don't pressure anyone into joining the platform,
Yeah.
and they can decide. And if they decide they want to stay, I think it's like $30 a month or something. It's very reasonable. Yeah.
So do you guys partner with brokers on your platform or other meta trading apps, or
We
how
we
how
yeah,
is
it's a
it
good question.
structured?
Eventually, we're going to have the ability to allow our users to link to their brokerage account through our platform.
Okay.
We're right in the middle of getting all that accomplished. So it's a big undertaking for us to add to our software and to our app, but we're going to be there, and probably November of this year we'll roll that feature out.
Nice. So in your experience, what's like a common limiting belief about investing you see a lot of your clients make that limits them from going full on their investments? What's one common limiting belief that cuts across all ages and all groups?
It's a good question. I think the number one thing is to settle for average returns.
Mm,
Wall Street is so geared toward minimizing people's return. They want to maximize their returns and profits, but they want individual investors to minimize
very
theirs
nice.
because, you can imagine if people were financially empowered, we'd have a very different world than we do now.
Yeah.
So what I do, I look at my role as someone who, when someone comes into our world, I help them understand that they don't need to settle for being average. It would be like, if you're telling your kids, hey, when you grow up, don't think about being anything great in life, just be average. I mean, you would never do that, right? Like you wouldn't even think
Yes.
about it. So I look at my role as imparting to our user base the ability and the knowledge to get minimum 30% return on their money. So as
Mm,
someone invests money, I say, you worked hard for that money, put it to work
yes.
and get it to work hard for you. And in this
Mm,
equity market with AI and technology, it is not difficult to get 30% return in less than a year. You don't even have to wait a year to get that kind of return. So
mm,
that's the biggest limiting belief is that, and Wall Street says it, they'll say, don't expect to get anything above average returns. Well, I think it's a lie. I think it's easy to do. And we prove it
yeah.
in our software over and over again.
And one common thing I see people making is the timing of the market. A lot of people know when to get into the markets. They buy the stock, they don't know when to get out.
Yeah,
And one thing they miss out is the profit taking because most people that buy stocks, they just buy it and hold it like real estate and
you're
allow it
so
to
right.
appreciate. But that's not. So does your software let people set the stop loss, take profits, or do you advise your clients on when to sell off a stock and buy a different stock? How does that
Yes,
work?
it's a great question. And you are so right. The hardest thing to do is to take a profit, get out of a stock. Most
Mm.
people will hold on to a stock, they'll ride it up and they'll ride it down. It's like maddening, right? So our software is proactive in that we email and text our subscribers to let them know when
Oh,
it's time to sell. So when a stock,
nice.
yeah, yeah,
That is nice.
got to, right? Like why else, we gotta bring the value to the people. And that's the hardest thing to do is sell.
Yeah, and that functionality is possible with AI because AI sort of does all the technical analytics and you're just guiding people, basically hand holding them through the investments.
It's a good point. AI is a part of it. The other part is the algorithm in our system based on the metrics that we look at with the stocks. We're looking
Okay.
at the fundamentals. I mean, even to the point of, are the insiders buying or selling their stock? We look at
Okay.
the financials. We look at the financial health of a company, like, for
Yes,
example, the
exactly.
intrinsic value of a stock versus the market price.
Yes.
And then, of course, we look at the technicals. We're looking at the stock charts. We're looking at the price of the stock in relationship to the moving averages. And from there, we give a ranking and a score for stock. So it's either hold it, buy it, sell it, or avoid it. Those are our 4 rankings for stocks. It's that simple,
Okay, that makes a lot of sense. So,
Yeah.
but for someone feeling overwhelmed, like this is a lot of information, and a lot of our audience, basically first-time investors, they just want to delve into it. What are the top 3 practical steps they can take to gain clarity and confidence with investing, especially with your software?
Yeah, it's a great question. I think first thing is understand your risk level, because that's
Okay.
really important. If someone's risk adverse, they don't want to be buying an
Mm,
aggressive stock. So first thing
yeah.
is and we have a questionnaire in our platform. It's like 13 questions, but they're very
Oh, nice.
specifically geared toward determining risk level.
Mm,
So that would be step 1, understand your risk level tolerance. And then step 2 would be actually open up what's called a self-directed account. So self-directed means exactly what it sounds like. You get to call the shots in that account. It can be
okay.
in a retirement, situation, or it can be in a margin or cash account. Either way is fine. Retirement's a little bit better. Those are called registered accounts. And because money grows tax deferred in those accounts. So that it'll grow faster. And then
Nice. Okay.
thirdly will be just buy it. Just buy a stock, just start
Make the first
investing.
move. Yeah.
Yeah, make a move. And it's exhilarating. I've had students and clients say how exciting it is when they hit that buy button for the first time. It's life-changing, because what they're saying is, "Hey, I've got this now. I'm in control of my money, not a banker or a broker."
Okay. Is there the functionality for dummy accounts? On some MetaTrader apps, you have dummy accounts where you can practice
Yes.
trading before you. Okay.
Yes, so they
That's a
can
cool
uh,
feature.
they can certainly do that within our software for sure. Yeah.
Okay. Makes a lot of sense.
Mhm.
So I know when I researched your website, I saw that Sterling Stockpicker uses something called a North Star rating. Could
Yes.
you explain how this rating simplifies choosing investments and what it means in the first place?
Yeah, so the North Star ranking is a numbered system 1 to 5 that we give to each stock. And
Okay.
based on what I'd said earlier, like the technicals, the financials, the fundamental indicators, based on those metrics, we crunch the numbers behind the scene, and it gives a scoring to each company. And the
Mm,
low, like a 1 star is an avoid, 2 stars is a sell, 3 is a watch closely or hold, 4 is a buy, and 5 is a strong buy. So what we do, we're very transparent on our returns on our 5-star stocks, and we
mm.
post them on our website. And currently, we're above the sector averages by 52% based on the returns on our 5-star stocks. So if a new investor comes into our platform and only buys 5-star stocks, they're going to feel comfortable that they're going to get decent returns.
Okay. And I love when you're explaining the way the platform works, you talked about value investing such that people fill out a questionnaire that helps them expose their values and ensure that their values goes along with their risk appetite. So how does Sterling Stock Picker help users to invest in companies that they believe in? Because yes, we just talked about the North Star rating and all, but how does these 2 questions match on the platform?
Yeah, so, you've heard the phrase where the rubber meets the road is our pick stock feature. That's the engine
Yes.
of the software, right? So
Mm,
someone would go on there and they would search stocks based on their personal values,
okay.
based on their risk level,
Mm,
and based on our North Star rankings. They would type in their risk level, they would show their personal values, and then they would click 5 stars, and up will pop a list of stocks that are aligned with their personal values and are buy candidates for them. It's literally that simple.
okay. So in your experience, what's like the time frame you see people actually making good good profit on their investments? I know the teacher story was an outlier story, but what's the reasonable time frame someone should expect to start seeing proper results?
I mean, the feedback that I can only go by the feedback I get from our
Yep.
user base.
Definitely.
We have a chat form in our software, and that's where people post how well they're doing in our software. And recently I saw a guy 18% return in 3 weeks. Brand new to the
Oh,
yeah, he was brand new to the software, and he said, I just want everyone to know I'm loving this, and this is the returns I got. I'm like, good on you, like that's pretty epic. So now I don't know his level of expertise or background, but for anyone, that's a really good return. And I asked what stocks did you pick? And he said 5 stars. So there you go. Yeah.
That makes sense. So is there a minimum investment threshold you advise for someone getting started? Or people can just start from any amounts ranging from $1 to $1 billion?
Yeah. That's a big range. I'm not sure if you can buy stock for $1, but I guess you could. You could buy some penny stocks, right? For $1.
Fractional.
Or super fractionated shares. So I think just start with what you've got, and you'd probably want to start. It would depend on, really just depends on what commission you're going to pay on your trading platform.
Okay.
If you're in North America, you're going to pay nothing to buy and sell stock. So that's helpful. So you could literally start with, $50, $100, whatever. But if you're going to pay a commission, you might want to invest a little bit more at a time.
So what does more range like? Is it like in the thousands?
I would say, at least 500 to 1,000 would be a good, if
Okay.
you're paying like $10 a trade or something, make it worth your while.
Okay, that makes sense.
Hmm.
So in the next 5 years, looking at the investment terrain right now, how do you see financial education shaping over the next 5 years? What are the outlier topics or trends you think would stand out within the next 5 years?
Well, I mean, we touched on a little bit AI for sure.
Yeah,
AI
definitely.
is changing the landscape of the investment environment. People
Mm-hmm.
have to have money in that sector.
Yeah.
Quantum computing is another area to invest money in. Technology, all the way, NVIDIA is now a $4 trillion company, but so is Microsoft today. Its market cap tipped over 4 trillion. I mean, it's just mind boggling, these numbers,
Yeah.
But the reality is that's the valuations now for these big companies that are changing the landscape of investing. So investors have to have money in those sectors.
Okay, the way I want to structure this question is a bit eluding me, but I'm talking in respect to the age range investing. So people in their 20s, people in their 30s, people in their 40s, how aggressive do you think people should invest starting from today? Because many people are still pushing forth the idea of investing to like, oh yeah, I'm not ready to invest yet. Maybe when I'm 45, I'll start investing. Age range. How would you advise the age range investments in this bucket should be?
You mean like someone in their 20s versus their 40s or
Yeah,
50s?
exactly.
Yeah.
What sort of stocks should they be investing in at this age range?
I'm not so sure if it's an age range thing. I think it's more of a results type of situation, like someone who
Okay.
wants like really good results from their investments. They have to be in that technology space. You and I just talked about AI, quantum
Nvidia.
computing, semiconductors,
Hmm.
that type of, because that's really where everything is going, and
Yeah.
the direction of that. But then there's a whole other topic here of tokenization, stable coins, how money's going to move around the world eventually, sooner than
Mm-hmm.
later. I know in the UK, your digital currency is kicking in October of this year.
Yes.
So you're going to see big changes, with stable coins and things of that nature. So I think another direction for folks to invest in are platforms that deal in stable coins. So you're looking at like Circle or Coinbase, companies like that, right?
Yeah. Do you have any preferences for gaming stocks? I know gaming area, the crypto market and all that. Is that all on the platform?
It's on the platform. It's not an area that I personally am involved in, but what do you like?
Okay.
Like GameStop is really struggling.
Okay.
I wouldn't I wouldn't really buy into them.
Hmm.
What do you like in that space?
I'm more tilted towards crypto.
Are you? Okay.
Yeah, but then again, crypto has a lot of backlash because of the high volatility. But what's your take on crypto investing? Do you do that or you just
Yeah,
avoid it altogether?
it's funny when our son turned 12, I said to my wife, we need to get so he turned 12 years ago.
Oh,
Almost 12 years ago. And I said to my wife, we need to get Dylan a Bitcoin for his birthday. And Bitcoin was selling for $350 a coin 12 years ago.
wow.
Incredible. So you're right. Huge volatility, like really just insane what's going on.
Hmm.
I think crypto obviously is here to stay, legitimized with the Genius Act that was passed in the United States. And it's really set the stage for digital currency. And really that's what the governments are looking for globally is they want to eliminate cash and they want to bring in, a tracked and traced currency. The interesting thing is stablecoins aren't currency at all. They're tokens.
Yes.
So it's really tricky, but I'm also a gold and silver guy. I believe in buying gold and silver coins too.
Yeah. I feel a lot of people overlook commodities because they don't have that information about it. Do we have a portion for investing commodities on the platform as well?
Yeah, we have we cover crypto and I live stream every week and I always talk about commodities.
Okay.
Like I'm a huge
Okay.
believer in putting money in there for sure.
Both.
Yeah, yeah.
Okay. So you usually there's a saying there's a saying you come up with all the time. Say Wall Street insights for Main Street investors. Can you break that phrase for us? What do regular people get here that they don't usually get in Wall Street?
Well, we've touched on it a little bit. Wall
Mm,
Street is going to bring the narrative of don't expect great returns,
mm,
diversify your assets, things like that. And I'm here to say that doesn't work, right? Those are things that really just don't work. And so I think mainstream has to, because look, we're not educated on this stuff in school. Like I never learned it.
yes.
You've never learned it, right? It doesn't, I talk to people all over the world and not one person has said to me, well, actually in school, I learned how to pick stocks,
No.
right? Nothing.
No one. Yes.
We're kind of kept in the dark and it's a shame because teachers we have a lot of teachers on our platform and they tell me, "Man, I want to share with my students the things I'm learning from you, but my hands are tied." So,
Mm,
we indoctrinate children in this system of control. Raise your hand if you want to say something, like it's just such a big thing to really squash creativity and it doesn't allow for knowledge, true knowledge of what works in growing assets. So, and I mean, it goes way back from a Rockefeller who created a 40-hour work week
that's checking.
and created housing near, back in Rockefeller's day. We're going down a rabbit hole here, but it's kind of an interesting thing.
Yeah, it's good to give the background to the whole
Yeah. Yeah.
insight here.
Rockefeller, JP Morgan at that time in the Industrial Revolution, there were mostly industries and they would build housing near factories so that the workers could get to work. They wouldn't call in
Okay.
sick. They would just be able to easily walk to work. So
Yeah.
these jobs became a center point to help the very wealthy continue to get wealthy.
Mm,
It was drilled in my head, go to school, get a good job, like all that stuff. And now we're in a society where people are waking up and going, well, okay, I have a degree in finance and I can't get a job. And
yeah,
if they can get a
that
job, it's
sucks.
certainly not paying, what they're looking for. So we have
Mm,
this interesting economy now, I think, where a lot more people are going to be more entrepreneurial minded. At least I hope.
yeah.
And
We're in a creator economy. Everyone is creating something.
let's hope. Let's hope because that is the first step to attracting wealth is creativity for sure.
Mm, true. Okay. Finally, for our listeners that are eager to begin today, what's the single best action they should take from this session today to aligning their investments with their values and goals?
I think the single first step is take out a pen and a piece of paper and write your goal on that piece of paper of where you want to be in 2 years. Not 1
That's a
year,
good one.
not
Not
the end
5
of
years,
this
not
year.
10 years.
Yeah, not 5 or 10 years, 2 years, because that's right. That's kind of right in front of us. And you will be amazed how when you put there's some type of universal commitment when pen goes to paper and the universe says, hey, I'm going to help you achieve that. So write your goal down. It might be to get out of debt. It might be to get a new job. It might be to leave your job. It might be to retire, whatever it is. Write it down and then start on a daily basis doing things that will help you reach that goal.
And one of them is to join your community. It says Stockpicker community
Sure.
and start
Yeah,
investing.
they can even find me on YouTube if they're like, you know what, I am so broke right now, I can't even pay to change my mind. I don't have enough change to change my mind.
It's a change my mind.
Go to YouTube and track me down and follow my work. Like I'm constantly putting content out to help people with their finances.
Amazing. So that takes us to the second part of this session.
Okay,
It's called the Firecracker round.
let's hear
So
it.
this is just me hitting you with a bunch of questions and you hitting me right back with the first answer that comes to mind.
Okay.
You ready? Drum rolls. Number one, what's the biggest misconception people have about investing and why should they drop it immediately?
Biggest misconception is that it's risky. It's actually very profitable and they should drop the risky idea immediately.
What's one major change coming to the financial world that most investors are not prepared for?
It's digital currency. Most investors are not ready for that. They're not situated for it. They're not set up for it. And it's going to be really important to prepare and understand what happens. The changes that are going to take place with this are going to be astronomical.
So if listeners forget everything else from today, what's one financial insight you want them to burn in their memory?
Set your target higher for your percentage return from money.
Can you expound on that?
Yeah, people work hard for money and they've got to get money to work hard for them. And the only way you can do that is really bring that target from 10% a year up to 30% in terms of when you put money to work that you want a minimum 30% return on your investment.
Yeah, and it's very achievable. It's just that people don't have that information. It's very achievable. That's why they need to join your YouTube. They need to join your Stock Picker Academy. Is it like an academy? Or I know you have the software, but it's what do you call it? What do you call the community?
We have, what do we call our community? Well, it's Sterling Stockpicker, right?
Yes.
And then our community is within the Stockpicker.
Within the Stock Picker
Yes,
software. Okay.
correct. That's where I'm in there every single day answering questions. And that's where I post my live streams as well.
Oh, that's nice. So
Yeah.
what do you do how do you unwind when you're not so busy giving people stock advice?
Oh my gosh. I walk the dog. I garden. My wife and I like to go for coffee dates. So yeah, that's how we unwind and relax.
Nice. Do you have any major summer plans? I know summer is we're already in the middle of summer. So any major summer plans you've got or not yet?
Our son is coming home next week with his girlfriend, so we're excited about that. And we're staying close to home. Our daughter is last year in college, so she's home for the summer. So yeah, I think we're going to stay close to home. And we just got irrigation installed and our in-ground
Yay, more
irrigation.
gardening.
I know, it's so great. Like we woke up this morning, I said to my wife, okay, the lawn just got watered without our involvement.
It's letting your money work for you.
That's it. That's one of the best investments we've made in a long time.
Okay, that brings me to the last question. What's your best and worst investment moment?
Best is probably still yet to come, but there have been many stocks that I've gotten 1,000% return on. In fact, just got one 800% last month with Circle, which I was talking to you about, mentioning to you about the stablecoins. That was an IPO that I just bought into and it did really well. Worst, I would say very difficult time investing in real estate during the 2008 real estate crash.
Mm.
I had apartment buildings that prior to that crash were worth $2 million. And like I got a call from the bank after the crash saying the valuation just dropped. You owe us $1 million today. So I had to just literally drop the keys off at the bank and say, thanks, good luck.
Oh.
Good luck with that building. That was
Oh,
probably one of
stop.
my worst investments. Yeah, but great property, but bad timing in the market.
But do you still invest in real estate today?
Absolutely.
Okay.
Like anything, you just got to buy it right.
Nice. So, yeah, how can we reach you? I know that we've gone far in time today. How can the listeners get through to you? What's the call to action for today?
Well, thanks for asking and thanks for having me on your show. I really enjoyed it. They can reach
Yeah.
me through sterlingstockpicker.com, Sterling like sterling silver, stockpicker.com. And I'm in the platform, available and happy to help anyone who reaches out.
I'll make sure to put the link in the description so that everyone can go and sign up. There's a 30-day trial, so there's
Yeah.
no excuses. Let your money work for you. But it's been an amazing time having you on the pod, Jaden.
Thanks,
Thank you
Steph.
for sharing.
My pleasure.
You shared how many years? You shared like over 20 years of your life in less than an hour. That's crazy. I think you should do
It is
you should
crazy.
you're so good at this. You should do a TED Talk.
No, I've been asked 3 times to do a TED
You
Talk, and
need to.
I've said
The universe is letting you know that you need to do it.
no.
You need
I've
to
said
tick
said
that
no
box.
every single time. I won't
Why?
do it.
Why though?
Why?
Why?
Because it would take me 1 month of my life to prepare. Like they're very stringent about TED Talks and about
Timing.
how, and to me, I don't see the ROI on a TED Talk. So that's just me though.
But Jaden, it's been an absolute pleasure having you on the pod today.
Thank
All
you,
the
Steph.
insights you shared and debunking the investing misconceptions, that was gold for me. And there
Awesome.
we have it, guys. There has been another incredible moment on the Breaks and Banks podcast. So we come your way next episode. It's been Stephanie, and this is me signing out.